So over the past nearly a decade, I've made millions of dollars trading Forex and crypto and stocks combined. And I take such a small amount of trades, but I risk a large amount of money on those few trades. So in this video, I'm going to show you why what's worked best for me over this past decade of trading has been to take fewer trades, but risking a lot more on those trades. And in fact, there's 3 reasons. I'll just give them to you right here. So that way you can just leave the video if you have something you need to do. The first reason is because it's super, super simple. Only taking a few trades, like a couple trades a week, you barely have any work to do. A lot of the people I work with, they spend like 15 minutes in the morning, 15 minutes in the evening looking at charts just because there's not much to do. We trade on the 4-hour, the daily, and the weekly charts. So there's not a bunch of complexity. The second reason is because trading this way, taking fewer trades and risking more on them, it allows you way more freedom. So the freedom to do whatever the hell you want to do, especially when you're relying on trading as a full-time income, it can get kind of monotonous staring at charts 8 hours a day or 4 hours a day or even 2 or 3 hours a day. I myself don't spend more than an hour a day total on charts just because of how simple my trading approach is. And honestly, I could probably lower it down to even like 15 to 20 minutes a day. But the freedom is a big deal. Now, the third and final thing is what I've noticed after working with over 4,500 people over the past 7 years of teaching people is I found that it is generally more profitable whenever you take fewer trades with really high quality setups on higher time frames. And then these 3 things come together with the simplicity and the freedom and the profitability to creating a trading approach that so many people get amazing results with. So what I'm going to do here in this video is I'm going to show you exactly what I do. We'll go through some of the trades that I've taken this past week. We'll go through some of the trades I'm in right now, as well as some trades I'm looking to take as this week continues in the live market. And then what we'll do is we'll actually go and we'll run a back test, and I'll just show you all this in the TradingView replay mode. So I've also here in my Telegram channel, I've been calling out a lot of my trades in here, and I just kind of post all the P&L and stuff. I've been running this for free for the past like 7 years. It's just a free resource. There's like 50,000 people in here right now, and you can join it with the link in the description. I'll put it in the pinned comment as well, but it's just a group where I share all my trades and setups and stuff like that. And it provides a lot of value to people coming and learning because it's, you can be in there in literally like 5 to 10 seconds from just clicking the link in the description or the pinned comment. But everything that you see me teach in this video, I show live there in that Telegram channel. I actually show like the applied process of it. So it's a good resource for you to learn if you're wanting to learn from me. So let's look at some of the trades I'm in right now. Let's break down the way that I trade. It's very, very simple. The way I look at the market, no matter what market is, the crypto, the stock market, or Forex market, whatever, is I look at the market as just random lines going up and down. Now, of course, we're using candlesticks on the chart here, but this is just for the sake of the example. So whenever you open up a chart, you'll see current market price. And generally what you'll have in a market like Forex is you'll have an area above price where price stopped before. We call that resistance. And you have an area below price where price stopped before as support. And so what I do is I just go to a chart. It doesn't matter if this is a crypto pair or a Forex pair, or back when I was actively trading stocks, I would do this exact same thing, is when you go to the higher time frames, like the 4-hour, the daily, and the weekly, I use all of those kind of combined to get trading ideas together. You'll generally notice that with current market price, there's a zone above and below price. And if it gets to the point where you look and price is in like a bear run going down in a downtrend, you don't see a support level below price, you don't have to draw one. If you don't see any zones at all, you don't have to draw any of them. But I draw these zones here, and then what I do is I set an alert at the resistance zone above price, and then I set an alert at the support zone below price, and then all I do is wait. And so over the next week, maybe 2 weeks, maybe 3 weeks, maybe a month or two, price eventually gets to one of these locations because it doesn't always go side forever, 99% of the time. And then whenever price does get to one of these zones, all I do is if it's at resistance, I sell with a stop just above the zone and a target just below. And I generally start with a 1-to-1 risk reward ratio. Sometimes I'll extend the risk reward, and sometimes I close early, like halfway to the stop loss or break even or halfway to the profit target. It's just a dynamic way of managing trades that I just use my intuition and experience that I've developed over the past decade. So, but for the most part, that's how I just structure the trades with a 1-to-1 risk reward. And it either goes up and breaks the zone and hits stop, or perhaps I get out early sometimes, or it bounces and it goes down and it hits the profit target. Now, what I was doing before is I used to risk like $500 to $1,000 on these trades. As I've grown my trading capital and gotten better at trading over the years, right now I'm currently risking anywhere from $20,000 to $50,000 on each trading opportunity. And I only have a very small win rate, right? My win rate's only maybe about 60%. But I ensure that whenever I do win a trade, I hold it all the way to the profit target in most cases. And whenever I lose a trade, I try to get out at around break even or a small loss, or sometimes even just close it halfway to the stop loss. This ensures that my average winner is a little bit bigger than my average loss. And that's the only reason I'm profitable. It's just because of simplicity and risk management. So if price were to then bounce here and go all the way to the next low right here, I'll get the alert to my phone from TradingView, and then I'll enter a trade there, put a stop below and a target above. And I also just watch price action when it gets there, right? Because sometimes you'll have a crazy news event like FOMC or NFP. You get the alert, but then price has already broken through the zone and it's like got a huge momentum candle. And trades like that, like setups like that, I won't trade them. But if I get the alert, I go look at it and there's nothing crazy going on, then generally I just enter at the zones. And it's either going to bounce upwards or it's going to bounce downwards. So now let's go ahead and look at the trades that I'm actually in right now doing this, and then I'll show you how to do it step by step in backtesting. So a trade that I'm in right now is AUD Canadian dollar. So let's go and look. Actually, it's right here in the free Telegram too. So I'm in sells right here on AUD Canadian dollar, and I'm also in sells on NZD USD. So we'll look at both of those. Now, the reason I'm selling AUD CAD is because price on the higher time frames, such as the 4-hour, the daily, like we're on right now, and the weekly, price just looks to be at a pretty clear resistance zone, right? So one of two things will happen. It's either going to break above and it's going to be a losing trade, or it's going to bounce and it'll be a winning trade. So what I've done is I've sold here at this zone. The entries are, somewhere along the lines of this, like just inside the zone. And the stop loss is just above the zone, and the target is at a 1-to-1 risk reward ratio. So the trade effectively looks something like this. I have a private Discord server where I share all these exact trades with the specifics out. And you can see right here, this is how it looks for me. On the daily, I'm short 2 positions on AUD CAD. This trade's about a $50,000 risk. The stop loss is way up there. And if it breaks above, I could probably even get out a little bit earlier if I don't think it's going to work out. And the target's down here. And this is what it looked like the moment I entered the trades. AUD CAD and NZD USD. And this is what it looked like yesterday before I went to bed. And so these simple trades, right? I just sold at resistance with a stop above and a target below. Now for this NZD USD trade, it was the same thing, right? Except it's just a slightly different type of setup, right? There's trades where price comes into a resistance zone that it bounced at in the past really hard, and then you just sell, right? So it's just a bounce of resistance. There's another type of trade called a break and retest, which you could argue is the same thing, just with a little bit more context. It's where price was previously bouncing at a zone of support, but then it breaks through and it just comes back to tap it. And then you just get short, and then it either goes down in a profit or it breaks back above the zone and you take a loss. So that's what I've done here on NZD USD. Price has broken below this zone. That's very obvious here on the daily and weekly. It was support there, broke below, found resistance twice, broke above, kind of found support there, but went up further. And then it came back and recently found support here like 2 months ago before having a little bounce. Now we've broken below and we've come back to retest. So what I have done here is I've gotten short with the idea that now that price has broken this zone and it's come back to retest it, I have a good place to enter a trade at. I have a very simple, easy way to control risk, which is just putting a stop just above the zone. And then I have a profit target of a 1-to-1 risk reward ratio. And we'll go and actually look at the actual parameters for this. So this is where I called this trade out. So October 3rd, and today it's October 6th. This was 3 days ago. Price came back in here into the support resistance zone, and then I just sold. I mean, it's very, very simple. Again, I don't do any crazy analysis. I don't have any sort of complicated, ridiculous strategy. And from what I've seen, the people that do have really complicated, crazy strategies where they're having all these criteria and they're trying to over-explain and give you this crazy narrative behind it, I look at it like price is just going to go up or down. You can give yourself like a 10-minute long narrative about why you think that's going to happen. Or you can just say, you know what? Like, I think it might go up here. I have a good place to get in. I have a good place to control risk, and I have an ideal profit target in mind. That just keeps things way more simple, so you don't get caught in with all these like mental gymnastics trying to like over-explain and over-analyze and give yourself some sort of a crazy narrative or dialogue internally about why you think it's going to happen. Because you can do everything right. You can spend 10 minutes giving a college dissertation on why you think NZD USD is going to go down, and it could still go up, and you could still lose. So I find separating myself from all those type of emotions that don't generally serve me that well in trading, and instead just saying, I think it might go up or I think it might go down. We have a good place to get in. It's at a support resistance zone. We have a clear area to control risk. We put our stop loss right past it. And if it bounces right, we make a little bit of profit. And me only coming out about 2 units of profit after every 10 trades or so. That's with my win rate's about 60%. So given enough trades, right, I'll generally win 6 out of 10 trades. And the 4 that I lose, that'll be 4 units of loss. And the 6 units of profit that I make, there'll be 6 units of profit. 6 minus 4 is about 2 units of reward. So if I'm risking, say if I'm only even just risking like $20,000 per trade, which is kind of my lowest risk right now per setup, 2R after every 10 trades means that I'd be coming out on top about $40,000. So, and oftentimes you'll see me risk more. The ones I'm in right now, I'm risking $40,000 to $50,000 on. So 2R from those trades will come out to be like $80,000 to $100,000 profit. So that's the way I approach it. I buy and sell at support resistance, and I don't give myself this super long narrative. I just make it real nice and simple and clean. So we'll see what happened with these trades. NZD/USD, you can see I'm here, and the stop loss is right somewhere above there. Take profit, something like that. So it just looks something like this. So now what we'll do is we're going to go and we're going to get into some TradingView replay mode backtesting. So that way I can actually show you more of these concepts and break it down a little bit better. So let's pick another pair that has USD at the end to make sure we're like doing this in US dollars. Okay, so Euro, 80 Australian dollar. So I'm going to go back to a random spot on the chart. Okay, here we go. So we're in March of 2018. So this is exactly 2 years after I started trading, because I started trading in March 2016 when I was 21, and I just turned 30 this year. I can't believe it's been like almost a decade since I've been trading. I'm so happy I started trading. I was going to become a police officer. I'm so glad I didn't do that. Like now I live in my nice place and walk my dog and make scrambled eggs with my wife. Like, it's a good life. But so 2 years after I started trading, this is where we're at here on this 80 USD chart. So what I'm going to do is I'm going to do exactly what I showed you, which is I'm just going to go to the chart. I'm going to find the most clear support or resistance zone above price and the most clear support or resistance zone below price. The only areas I see right here is that area as resistance. And then I'm going to see if we can get something in here. Does that look decent? This looks okay, but the fact that it broke below makes me feel a little bit weird about it. So what I'm going to do is I'm just going to use that as the lows right there. So then the idea would be we set an alert right there. This is just, it shows a horizontal line, but you know, it'll be an alert in live market trading. This is just TradingView replay mode. So now we just wait for price to get to one of these zones. So let me go to the 4 hour here. That way we can make sure we don't overshoot it if it gets there too quick. Okay, cool. So now price is here at this support zone, so the alert would have gone off. Then what we will do is we're going to use the idea of saying, look, it's at a low. If it breaks below here, okay, then we lose a trade. But if it bounces here, then we can win a trade. And this allows you to structure risk really well, which is why I love support resistance. It sucks at predicting price. You can't predict price with it, but it's a very good method of controlling risk. And that's my favorite part about it, is because it gives you a way to say, okay, I can enter here at this area where prices bounced before. I can control risk by putting a stop just past that area, and then you can set a potential profit target for whatever you're comfortable with. Me, like I said, I generally start at 1-to-1 risk reward ratio, because the profit targets or stops are usually hit pretty quick, even if you're using daily charts, right? Because if your entry's at a clear zone, your stop's just past it. It's usually a couple daily candles max, but sometimes the trades can drag on for a week or two, but I'm not in trades for like months like I used to be when I was like going for big profit targets. Trading just 1-to-1 risk reward ratios has given me so much more confidence and so much more consistency, because you don't run through these crazy losing streaks. Like if you're using 1-to-3 or 1-to-4 risk reward ratios, sometimes you'll get into the position where you lose like 5 to 10 trades in a row regularly, and that's really damaging to a trader's confidence. And on top of that, it disables you from being able to risk a lot of money per trade, because you don't know when the next winner is going to be. And you do know that, as a matter of fact, more than 50% of your trades are in fact going to be losers. And then you have this shit of where price goes into a huge profit, barely misses your 1-to-3 risk reward ratio target, then reverses and goes all the way back. You end up having to get out at break even or stop loss. So I just don't even play that game. I find that using 1-to-1 risk reward ratios gives me easy ways to structure risk. So let's say we get into a trade here, and we know it's either going to go up or down, right? So we've entered. We don't want to put our stop too close to the zone, and we also don't need to put it way down here, right? Just far enough below the zone where if you're wrong, you know, you'll know about it and it'll stop you out and take you out of a loss. And if you're right, it'll bounce. So this breaks below the zone, tries to come back above. So it looks like it's probably going to continue to stop, but it doesn't. So this is why, generally speaking, I don't use tight stop losses, is because if you're using a tight stop like that, it can screw up a lot of the trades. And also, if you use a big stop, that's why I don't use this either, because then you have to like target really far just to get a 1-to-1 risk reward ratio. So I don't play that game. I just do like this essentially, and that all works out pretty nice. So this one hits the profit target, and if I risk, say, like I said, I risk 20 to 50K per trade. Let's just say I risk 20K. This is a $20,000 profit. The cool part about this is that by taking fewer trades and then just risking a shit ton of money on them, it means that you're doing like a fraction of the work everyone else is doing, but you're making orders of magnitude more profit. Now, on this trade, let's say I risked $20,000. If I knew the win rate was relatively low, like it wasn't even 50%, and I was using 1-to-3, 1-to-4 risk reward ratio with like a 25% win rate, maybe, you wouldn't be able to risk as much, right? For me on my accounts, I trade anywhere from a $300,000 to $500,000 account in Forex trading. And that's just the money that I have in one account. I have more capital allocated to Forex and a lot of capital allocated to crypto and equities like stocks and stuff like that. But of the capital I've allocated to Forex, I just put a small balance into an account. In this case, this account's like 300K or something. And then what I do is I just trade that because you can get high leverage in Forex trading. And when it comes to that, it means that you can risk higher dollar amounts per trade. And since you're only taking a few trades here and there that are really high quality, the risk is structured very finely, then it makes things so much easier for you to like manage and be profitable. So instead of risking $1,000 per trade and having to come out 20 units of profit, right? In this trade, I just risked 20K on it. And this, I could be doing this on like a 200 to 300K account. That's about maybe 10% of the account risk per trade. And I know that the average consecutive losing streak is generally about 3 trades, but worst case scenario, it's generally about 5 trades. So it gives me enough of the balance in the account to be able to get through a losing streak without blowing the account most of the time. And also, it allows me to grow the account pretty quickly. So that way I can double the account, withdraw the profits, do it again, double the account, withdraw the profits, double the account, withdraw the profits. And if I ever do blow the account, then I have plenty of profits offset. So that way I don't have to worry about like losing all my trading capital. And I don't even have all my trading capital in one account, right? I have most of it just sitting in cash, and I just put a little bit into an account at a time. That way it preserves capital. So this trade wins. Now we've won this trade. It's like $20,000. Let's skip through and see if we can get something else here. So we're looking at current market price. We got to find a clear support resistance zone above and below price. Let's go ahead and head back out here to the daily chart. And let's just hope TradingView loads. Okay, cool. So now what we'll do is let's draw a support zone. Let's do it right here. As far as the resistance zone, I think I'm just going to keep this resistance zone right there. So we'll see what happens. Let's see. Okay, cool. So now we're coming in hot. A lot of people might draw a support zone like this right here. The thing is if you do that, right, that might be where it bounces, sure. But if you do that, you don't want to put your stop right here, because if you put it just below that zone, well, then it's just coming to the next low and it could bounce right there. So what I do is I don't even use zones like this. I just use zones right here at the next low. And then what I do is I just wait for price to get into that region, because then I can enter there, stop just below it, and a target of 1-to-1. Now, doing this means that I miss a lot of trades, but that's okay, because it means that I'm keeping my money in my pocket instead of risking it on trades that have a higher potential for drawdown. I love simple, easy trading opportunities where you don't have to be very suspicious of it. You don't have to ask yourself 2, 3, 4 times, should I really be doing this? I love stuff like this. So this just keeps things nice and easy for me. So what I'd do is I'd set an alert here at this zone, and then when price gets there, I'll probably buy, assuming the context is appropriate. Let's see if it even gets there to begin with. We'll go to the 4-hour chart. Get a sip of coffee while I'm waiting on TradingView to load. And let's see if it actually goes down there. Okay, cool. So it does go down there. I would have entered right there, and then this went and dropped straight to stop loss. A cool part about this is that when your trades are structured like this at the major zones with a stop just on the other side of it, your trades are generally a quick duration. Like you remember this one over here took about 3 days, 4 days. It looks like 3 days to play out. This one right here just took 1 day. It was the same candle, right? It took less than 24 hours. So now you're on to the next. So now we've won one trade, we've lost another trade. This is generally my stats, right? It's close to a 50-50. However, it's just a little bit higher for my current stats over the past couple months. And but that means that like out of every 10 trades, on average, if you given enough trades, you'll make like maybe like 60% win rate or something. So now what price can do is price can come back here and retest this as resistance and then bounce, or it could break back above, and then we could like try another long. So let's see what happens. So it goes back up here, it tests the zone as resistance once and then twice. So this right here would be a great place to get short. As it comes back up into here, tests the zone and starts moving away. So let's say as it gets into the zone, tests it and starts moving away. Let's say that we had sold after like this. So, right, so say it's like resistance and it starts bouncing away. We enter, put our stop above, target at 1 to 1. So now let's play it out and let's see if it breaks back above the zone or if it continues down. So in this case, it looks like it's going to break back above the zone, which it did. If I were able to watch all these candles, I might have been able to have managed that a little bit more dynamically, but unfortunately I wasn't. So this is another losing trade. So now we've currently won one trade, we've lost 2 trades. Now let's go, let's wait for another setup. So this was a buy at support because now it came back here, tried to bounce as resistance, failed, broke above, came back to try to bounce as support. So let's say we did the same thing we did originally, which was to buy at the support zone. I'm going to do it where the alert is at. So buy right here, a stop just underneath the zone. That's very tight. It's actually, well, my original one was down here. So let's just keep that about the same. And then take profit, just a 1-to-1 risk reward ratio to start the trade off. So now let's see if it breaks back below the zone or if it has the bounce. So this one doesn't have the bounce, it goes back up. So now this is a 3-trade losing streak. This is why it's very important to not risk your whole account per trade, because when things like this happen, most people get disheartened and they just abandon it and they just run away and they don't trade anything. Or they start risking lower amounts on future trades thinking that the losing streak is going to continue. The way that I do it is I just keep going, just because I know what the stats are. I know that there's a very high percentage chance I'm going to take consecutive 3-trade losing streak and even a 5-trade losing streak. And you can't be losing your mind when that happens, just because in the same sense, when you win 3 trades in a row or 4 or 5 trades in a row, which is just as statistically likely, and in fact, even more statistically likely if your win rate's above 50%, you're not upset about that, right? You like that you're winning multiple wins in a row. But when the random distribution of loss comes in and causes you to lose like 3, 4, 5 trades in a row, people get weird. They start doing weird stuff. I learned that you kind of have to ignore those emotions in trading. Certain emotions in trading are good because they kind of give you a way to control risk, and they allow your intuition to present itself in terms of like all your experience that you've had. So that way you kind of know what feels right and what's the best to do. But having emotional thoughts and sensations govern your decision making, such as like not risking normal amounts in the next trades or not taking trades you wouldn't normally take. These are all very very challenging things to deal with, especially as a new trader who's just becoming profitable. And it's not something that's easy to get past. It took me 4 years, my first 4 years of trading, till I finally got past it. So it is what it is, but I just keep trading normally. And that's what I've learned, is just not to really read into it too far. You're going to have trades that win, you're going to have trades that lose. So now what we'll do is, let me go in here and let me just fix up this zone. So now that price has bounced there at that zone, we don't need this one up here anymore, so we can delete that. So now what I'll do is, I don't see a clear zone below price. The only one I see down here is like these lows, but that's a pretty big region. I'll keep that there for now, and let's see what happens. So if it comes up to this resistance zone, I'll sell. So I'll sell right here. I'll put my stop above the zone and my target at a 1-to-1, and we'll play it out and see what happens. So this one goes and it's the profit target. So now what we'll do is we'll wait for the next trade. What I'll be doing is waiting for it to come down here to this next support zone. So it doesn't do that. Instead, it pops up and then it comes back into this zone to test the support. So we could buy on the retest, just like where the alert was originally. Stop below and a target above at a 1-to-1 risk reward ratio. We'll see if it has a little bounce off the zone. So that one has a bounce off the zone. Very cool. And so now we'll just wait for another setup. Let's just click it forward. I don't really see any other clear zones here right now at the moment. So now hopefully we'll get this next one set up. Yeah, so this one looks good. So it starts to bounce. So we'll buy here at the support zone. And then what we'll do is we'll put a stop below the zone down here, right? It's just enough under all these little recent lows. and then a target at a 1-to-1 risk-reward ratio. So we'll see if this bounces or if it breaks. So this one bounces up, goes and hits the profit target, and and so on and so forth. So yep, and then now like it would be a break and retest right there for sells. This will be the last one. I'll just put the last one. Comes in here. Let's say we entered after the bear candle. So let's say it started going down. We just entered right there. You can put your entry there. Stop just has to go above the zone. Targeted a 1-to-1 risk reward ratio. And it looks like, I guess that would have already hit. Okay, cool. So now let's go ahead and let's examine the stats here. Just doing the same thing, which is just bounces of support resistance zones. Whether you call it a break or retest or bounce of resistance, bounce of support, it doesn't matter. It's all the same thing. You're just waiting for price to get to a region on the chart where it seems to have bounced a couple times in the higher time frames. And then you just buy or you sell if it's a support versus a resistance. Put a stop past the zone, risk a dollar amount you're comfortable with on the trade. That's it. It's not complicated at all. So let's look at the stats. So we've won one trade and then we lost 1, 2. I thought this was 3. Yeah, we lost 1, 2, 3 trades. And then we won 1, 2, 3, 4. So you'll see right here that losing streak was 3 trades, but then we had a win streak of 4 trades. Most people will not allow, they will just lose focus, get shiny object syndrome, try to change their strategy the moment they lose a couple trades in a row. And it really is a shame because you can have as perfect a system as you could, right? Meaning like it's just reasonable, it makes money long term. But they will sit through like something like this. We have 3 trade back-to-back losing streak, and then they will stop trading it, and then miss this win streak right here, right? And with the 60% win rate, it ends up being like really, really nice. So let's see, how many trades is this one? So that's 4 units of profit there, plus that, so 5. 5 units of profit minus 3 units of loss. So that is 8 trades, and out of those 8 trades, 5 of them were winners. So 5 divided by 8. So you can see it's a 62% win rate. And again, this is just taking this is only taking 8 trades, right? If the more I did it, like 10, 50 trades, 100 trades, way more than we have time for in this video today, what you'd probably see is the win rate would fluctuate around 60%, maybe like 56, 57%, maybe like 64%, something like that. But it's generally right there around 60%, just like I said at the beginning of this video. You only have to win a couple more trades than you lose, and this is a massively profitable system. When we do the math here, consider this. Let's say on each trade I was risking like $20,000, right? So 20K times 5 winning trades equals $100,000 in profit, right? So now we have to subtract the losses minus 20K times 3, which was, we lost $60,000 on those trades, which was that 3 trade losing streak. And so the net profit, if you've done the math, equals, net profit equals $40,000. Now, I want to ask you something. Let me just tell you something. This is from March of 2018 to August of 2018, right? So this is one pair, AUD/USD. There are 24 FX majors and minors, and then even more if you include the exotics. And then if you're trading cryptocurrency and stocks and all this other stuff, you have an endless amount of trading opportunities that just fall right into your lap, right? So it's not like you're going to be trading one asset and one asset only and one trade at a time, right? You're going to be doing this on multiple different like trading opportunities. I take anywhere from like 0 to 4 trades per week. So sometimes it's 1 trade a day. Sometimes it's only 1 trade a week. There's sometimes weeks where I just don't see anything I like, so I just don't take a trade. There's no sense in risking it for the biscuit, in my opinion, when it comes to stuff like that. But what you'll see right here is that by just doing this over and over and over, you have access to all these different pairs that you can trade with, and it makes things very, very nice and easy, right? So $40,000, the amount of time involvement in this is pretty much nothing, right? Because this is without even really monitoring it, right? This is just letting it hit stop or letting it hit target. I might have an even higher win rate if I just managed it dynamically and like closed at break even or loss if it didn't look like it was going to work out. But this is $40,000 just over the course of 8 trades, just risking 20K each. Like I said, I make about 2 units of profit for every 10 trades. So if I'm risking 50K per trade and I take 10 trades, 50K times 2 units of profit, I might make around $100,000 after swaps and fees and commissions, maybe about $90,000 over the course of every 10 to 20 trades or so. And so it's such a beautiful trading approach, right? You got the simplicity, you've got so much freedom, And on top of that, it's just generally more profitable from what I've seen. So this is the backtest example. So what we'll do now is we'll go into the live market again, and I'm going to show you exactly what I'm looking for. Let's have a look at the AUD CAD trade. So this looks like it's not going to work out. What I'm going to probably do is close this once I finish this video and just get out of this at a small loss, like maybe halfway to the stop. NZDUSD, it looks like it's struggling to bounce here from the zone as well. So I might be closing this as well, but to be honest, this still looks good. And honestly, on the weekly chart, AUD CAD still looks good too. I need to see how this candle closes, but right, it's Monday, so it's going to be 5 days for this to close. If the daily candle closes above this zone, that'll be a good reason to no longer be in the trade. So here's some more potential trades I'm looking to take. And again, I just use the higher time frames like the daily, weekly, 4 hour. I'm looking to take this trade right here in USD CAD because if price comes here into this resistance zone to the previous highs, that's an area where I can just sell at. So I would do that, and the trade would look something like that. Let's say the entry is a little bit lower, right? It starts bouncing, put a stop above and a target below. The trade would look something like this. Look how much more reliable and likely this is to play out instead of trying to take a trade, say, for example, like this, where you enter right at the zone, you have a stop like that, and you have a target way down here of like a 1-to-6 risk-reward ratio. For one, you're going to miss so many entries like this because it's not always going to give you the perfect entry. And then also, you run the risk of just getting pinned out on a little bit of a liquidity spike above the zone before it ends up going into profit, because it all the time will do that and then break back below and then find resistance and then turn over, right? As is the case with AUD CAD right now. So by not doing that and instead just using a 1-to-1 risk reward ratio, it keeps things so much simpler and you don't have to pinpoint the exact entry, right? As long as your entry is somewhere here inside the zone, you can throw a stop past it and a 1-to-1 target. Price barely has to move and then it smashes into your target. Everybody else is trying to hold for the next week or two, perhaps even few weeks, trying to catch a bigger move, and you have to worry about things coming back. It's easier to predict where price will be in the next few days than it is to predict where price is going to be in like the next month. So I just prefer to like not have trades like that where they take forever, right? I prefer to get in, get out. I can make a lot of money very quickly on a small win streak, and I don't have to sit around playing all these games that most people have to do if they're like actively like day trading and spending a lot of time on charts every day. So that's USD CAD. The other two that I'm looking at is CAD JPY. This barely missed my alert. I was asleep and I wasn't watching this, because this just happened. So a couple hours ago, so overnight, it's 8 a.m. So this was happening around midnight where it was up here in this zone. Barely missed my alert, but essentially the trading idea is something like this, right? Selling somewhere here inside the zone, having a stop just above the zone, and then having a 1-to-1 profit target, which had I entered this, it'd be almost to the target, right? But, again, I'm not in this. I would be if it comes up here to this alert. So that's that. USD JPY, it's like the same essential thing as a CAD JPY that we just looked at, but just, on this JPY pair. So if price goes up into this resistance zone, it needs to go a little bit further. And as a matter of fact, I'm just going to extend the alert even further up here, just to make sure I'm getting like a, reasonable entry, because from that point, it's either going to break above and invalidate, or it's going to bounce and be valid. The risk reward was something like this. So this would be sort of the kind of the way the trade looks, right? A simple sell at resistance. You don't want to be entering when price has already left the zone and it's way down here, because then you have to have your stop loss way the hell like up here. And then to just get a 1-to-1 profit target, it has to be way down here, right? And there's so much that can happen in that time horizon. That is why I elect to take trades like this, where I enter at the zone with the same stop loss. Look, the profit target, a 1-to-1 is right here. That's so much easier. It's so much easier to have something like this hit where it goes to resistance and then just bounces and hits the target immediately, versus something like this where it gets into the resistance zone and then it starts coming down. And so you sell, right? You sell like as it starts going down right there, and then it has to go all the way down here to profit, and it could go up and test the zone again and it's halfway to your stop. It can have a little pin above and then it's halfway to your stop. Then you're thinking like, why didn't I just enter right here at the zone? Because if you had waited, sure, you might miss trades because it ends up going to the profit target without you in the trade, but that's okay, because it means that whenever you do get into trades, you're optimally positioned, and it's a very good way of doing things. So that's why I'm looking to sell USD JPY here at this zone, and the trade will look probably something like this right here. And those are all the trades for now. There's a couple more trades that I'm looking for this week. And again, like if you want to follow that, just head over to my free Telegram channel. I post the the screenshots in here of what I'm looking for. Yeah, some of the ones I've just talked about, like CAD JPY and USD JPY, and these other ones. Like this was when I shared CAD JPY last week because I thought it would bounce there at the support, and you can see what happened to CAD JPY. It bounced there at the support. So this is on the daily, but you can see the screenshot I posted was on the 4-hour. You can see how it's CAD JPY. It's on the 4-hour right there. October 3rd is the timestamp for the analysis image, and I just thought it was going to bounce here at the support because it's a pretty clear support, and so it ended up bouncing there at support. So it didn't come to the place I would have entered. I would have entered down here if it would have gotten to where these extreme lows are. The risk structure is just better, but it still bounced there at that support, and now it's bounced here at this next resistance zone. So it's very, very simple. It's very, very nice, easy, and clean. Probably going to have to go and cut this 80 CAD trade right now at a loss right here at the end of this video, and I'll probably hold NZD USD for just a little bit, and we'll kind of see what happens. There's plenty of more good trades. So whenever I lose a trade, I never get upset, even if I lose 3, 4, 5 trades in a row, because I know that the next win streak is usually around the corner when you're using risk rewards like 1-to-1, and when you're trading a purchase so simple that you get tons of trades for it. So if you liked this video and you made it here to the end of this video, leave a comment with the number 420 in your comment. So that way I know you watched to the end of the video. And then for the first day or two, I'll engage with you guys. I'll chat with you guys down below in the comments. If you have any questions, ask them. Just make sure you include 420, the number 420 somewhere in your comment, like maybe in a crafty, creative way. So thank you for watching. If you did make it here to the end of this video, if you hit the like button, that does 2 things. That helps my channel grow so I can teach more people how to trade. But it also means that you'll get recommended more of my videos, and unless you're subscribed, which I mean you can subscribe to if you want. But hitting that like button does help a lot the algorithm, especially if you made it here all the way to the end. So I will see you in the next video, and we're going to see how these trades go out. I'm going to go and bite the bullet and close AUD CAD right now, and then I'm going to pray that NZD USD works out. See you in the next one, my friend. Bye.